Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday. We're at the 3rd of January, 2024. It's so easy to say that now. I don't know why. And we're at about 6:15 p.m. Central Time. So one of the big events today was seeing the FOMC, the Financial Committee coming out of the Fed. What was their decision and where were they? Nothing that I read in there showed 6 rate cuts coming. Nothing. So I think the market has to figure out who is right, the marketplace or the Fed. That's the first issue. They are still looking, and I'm talking to Fed members, at a strong labor market, not overly strong, one that they say is getting back into balance. We saw the JOLTS number today, and because of a revision making the prior month even a higher number, okay, this number was a little bit lower. But the reality is it's still a very strong number. We're looking then at the ISM numbers, and we're seeing how the manufacturing sector employment's going. I pointed up. In fact, I was looking at the head of the ISM, and they were on TV on an interview. They think you'll get to expansionary number over 50, possibly by March, the way that the index is going. So these are not weak parts of the economy, and it has the Fed, of course, scratching its head, which it should do. Now, this is only one part of the puzzle today, and remember, the Fed minutes are from last report. We have another report coming up very shortly. You do know that. One more right in front of us. So now the Fed is going to be looking at Friday's jobs data report. I believe they'll get a CPI report, and we'll have some ideas again as to what they think. We'll go through another set of minutes. So for the next 4 weeks, you're going to get a lot of data that you have to munch on and figure out what to do with. What is the marketplace doing? When you sit back, not when you're trading it. Sit back and think about what's going on. We had 9 weeks of advance, almost straight up in some of the stock indices. Not a month, not 2, 9 weeks in most. All right. At some point, it's a rubber band that you pull, and it has to let go a bit. You either go back into bearishness or you consolidate. Well, the underlying economy is so good at this point, why would you get bearish? That's the first question. So the argument becomes one of consolidation that I think makes a lot more sense. We have to understand where interest rates are, and we have to understand that the battle now is the market wrong or is the Fed wrong? Wrong being how many rate cuts. The Fed is in agreement, if you read the minutes, that the time to discuss cuts is upon them. They certainly are at the point that unless there's a surprise that they don't see out of some event, what could that event be? Could be an energy that sets the world on fire. We don't know what that event could or could not be. There's no way to know. I'll come back to that in a minute. Just wanted to tease you with it. We saw today in the energy market several events. Number one, in Iran, and there's a city, and I don't know which one it was, their commander, Soleimani, who was killed, I think, 4 years ago now, there was a big procession to celebrate his life, and there were bombings. I believe 100 people were killed, nearly 200 were maimed, and immediately it goes up that the United States and or Israel are the culprits behind it. Immediately, the United States goes, we had nothing to do with it in any manner. It could be ISIS. It could be anybody. Nobody knows. There are perpetrators there that want nothing more than to see Iran get involved in events nasty for them take place. If Iran uses its head, it will figure out what it has to do and weigh it. It's another thing that's happening. The Fed has to think about all this. The coalition in the Red Sea is frustrated. If you're reading the reports, they are extremely frustrated. They're getting to the point where they keep looking at everything that is taking place there, and they're saying to themselves, what are we doing? The shipping companies are not going to let loose at this point their cargoes and send them through. They watch what's going on, and miraculously, nobody's been killed as these ships have been hit by the drones out of Yemen. And the patience of all this is being tested. It's not that there's not patience, financial patience. If you're sending these ships on the other route, you got 7 to 11 days more. Do you know what it costs per ship to send this goods? You know what it does to the supply chains. So we are getting to the point where the patience is being tested, and more of the allies are saying we should go in and strike within Yemen and take out the launch centers and so on. How many are mobile? How many are fixed? I don't have the slightest idea how they'll do it. Well, I know between all of the allies and the satellite and everything they've got, they can track things and they can do an awful lot of attack with the arsenal they have at sea. So it's getting to that point. That's obviously not a bearish element. The Biden administration today said, okay, let's buy another 3 million barrels of crude. Prices are down here into the 73 area. Not bad. I give them credit. They sold a lot of it as high in the 90s. This would be a heck of a trade. So I think Joe should retire and become a trader. I mean, he seems to have the knack. That's one thing you can't argue. He seems to have the knack for that, right? Okay. So that brings us back then to interest rates going from 3.8 and a fraction now into the 3.9s, maybe up to the 4% area. We look at the dollar that's come back. But are these markets to the point where maybe, just maybe, they did what they had to and now they start consolidating? Well, let's take a look. When we look at the E-mini weekly S&P index on a weekly close-only basis, I like to look at this just from a close. It's got the bias up. When you're over the 18-week average of closes, I call the bias up. Under it, the bias is down. And I filter buy or sell signals this way. If I had a sell signal and I'm over that, my work says you don't take it. If you have a buy signal under the market, you don't take it. If you're a trend trader. If you're a contra trend trader, that may be a whole different ball game, but we won't go into that. When I take a look at what the market's done, we came up, we made a top of sorts. You can't argue that. You see it right there on the parade. And the market has been coming down. What's the pattern here? We have a higher high, we have a lower low, no trend. Yet the market certainly went up for a week leading into the New Year parade. And it was just every day with higher highs. Now we've given that up. And since, if you think about this, each day we're getting lower lows in the market. Where's the market gone to? You will hear me over and over say, markets like to go back to the 18-day moving average of closes. I'll call it the line in the sand to regroup and figure out what they're going to do. You don't see this here as the market went sideways, got to it, and then it decided to take off. In this case, instead of a break to that number, here we went sideways to it. Here you're breaking to it, but you're at that support zone. So the market now has to decide, was this enough of a correction? And the market can begin a consolidation. The market had hit the upper bands back here. It made slightly higher highs, not dramatically, and then corrected. In terms of momentum, this is what the whole thing's about, if you understand this. Momentum, from my definition, may not be your cup of tea, leads price most of the time, most being the vast majority of it. I can define that 70, 80, 90%. But there's always some percent where an event takes place, could be a report, could be a Fed move, it could be a war, could be something where all of a sudden price takes the lead over the momentum. In this particular case, you could see you lost together both the downside momentum and you went right to the 18-day average and you're sort of sitting there. Now, any reading of the red underneath 30 is oversold. You've quickly gone from an uptrend now into oversold territory is the point that I'm making. And I think the market's going to scream over the next few days that it wants to try to consolidate in the neighborhood of that 18-day average of closes. The NASDAQ is already very oversold. You fell back to the average yesterday. You're under it today. If it gets another leg down, then it's got a high probability of trying to bottom out in the neighborhood of 16,333, the lower Bollinger Band. Again, you're not trending. You have a higher high, lower low. Today was the end of the Santa Claus rally officially, if you follow Yale Hirsch of the Stock Traders Almanac, who founded this idea. He discovered this famous seasonal It's worked a number of times. It certainly worked this year. If you bought it the 5 days before Christmas, you caught that rally, and now the market is basically over. Now, the uptrends in all this kicked in, as you know, and I did special reports on stock indices. In September, I did them, and then I updated them in October, calling for this rally. Now, some traders will say that the trend ends on the 8th, because if you go back over the past 15 years, not including this particular one that we're in right now, in other words, the current move in the Dow, if you bought late December around the 19th, 20th, and you came out around the 8th, it's won 14 or 15 times if you go back and you do your counts. I buy services that tell me all this. So it is important. Could we fall down here? Yeah. But again, if you came in mid-December, you've had a nice lead. And yes, it already hit a Bollinger Band. And as I teach it, traders take money off at that point. Have we lost the momentum trade? Yes. Can it be gained back? Only if you have tomorrow only, a dramatic move to the upside in the Dow. In the Russell, here's the small caps. They were carried along. They have not been a leader. I know so many people want to buy them. They did all of 2023, and they were wrong all of 2023. Now we're hearing, well, the Magnificent Seven, they've had their day in the sun. Sure. And that's a facetious sure. Is Apple having a hard time right now? Yeah, it is, all right? Is Apple overvalued? But look at the PE ratio. Is it 32 or something? It's way up. I can get that, all right? Whatever, doesn't matter to me. The company's a phenomenal company. It's going to generate $100 billion a year in free cash flow. Come on. These aren't the type of companies that get into big trouble, but they get ahead. The market gets ahead in pricing them. Those things happen. Can they start aggressive buybacks to support their stock? You know it. So those are the events. But in this market, what you did is once you lost, and I'm going to just show it to you because you want to take that enhanced Bollinger Band course and learn this on your own. That's what I try to do, is work with you here, give you an idea. You lose it. It all happened at the same time. Why? Probably thinness of trade, the time of the year we're in. It's okay. This is that one couple of times that they both do it at the same time. The momentum and price move to that key moving average. But I'm looking for the support there. Am I not a broken record? You lost the embedded reading. You moved right to the 18-day average. You're trying to figure out what to do next. Let's go to the 5-year. Let me come to that. Same identical thing. Okay, I'll come back. This is your 10-year. You lost the reading. This is the 5-year. You lost the reading, and I can just show you. Bingo. You're coming in, you're closing at the lows. If you drop any further, probably the 18-day average, especially if you lose it. Bingo, and now I'm going to look to see if the market can bounce back up to it and fight a battle there. Let's assume that the markets can't do that. Well, then your next support, and all of them, big-time support, is going to be right in here in the Russell. 10-year note holding there, 5-year note holding the 18-day average. I wanted to go back to the Russell and just show that, by the way, so might have thrown it out of whack. Dollar index. Need you know what I'm going to say? Between the 18-day average and the 200, I think that's about all she wrote, and then the market's got to figure out what to do next. In the euro, if the dollar's coming up because it lost the reading, did you not lose the embedded reading right here? So in this one you can see, you're flirting with losing the reading. 81, you lose it the next day. You're probably going to the combination of the 200 and the 18-day average. You don't wait for it to be hit. You probably are reacting and going, maybe it's time to be out, and notice how the market's right there. Could it go lower? Yeah. Is it trending? No. Does this look like a trend? You have a higher high and lower low. It's one thing to be out of long positions, very different thing with no trend to say, well, it's going to keep going down. British pound classic top, each time the Bollinger Band, no overbought, no embedded conditions. Now, the craziness in Bitcoin. This is where you get nuts. When I tell you nuts, violent nuts in the market. What's the Fed? Not the Fed, the SEC. Are they going to release? Is it going to be the grayscales? Just go, which one's it going to be? How many are they going to do? Maybe they won't do any releases of these ETFs. So you're going to whipsaw like there is no tomorrow. Now you get the violent action. So is it a day trader's delight? Oh, they're having a ball. Give you an example. This is, let's go back one more day here. This is the first trading day. You're up 7%, $2,800. The next day you're down $2,300. That's today. Here you are tonight, and you're back up 225. Notice all the fighting between the Bollinger Band and the 18-day average. I'm laughing because this is classic what I teach. And that's what it's probably going to do here. It's just crazy man land. Then we get to the differential between Brent and WTI. And Brent should gain on WTI. And the answer is why? Gee, where are the problems in the world for oil? Middle East. So if there's going to be a premium, can't use the Red Sea, anything going around with oil cargoes and the like, it's more money. Not that the oil's more money, the shipping's more money. The whole thing becomes a much more expensive process. In the Brent, right now the trend is down in the Brent. If you take this out, this high right here, 79.04, you negate the downtrend. If it's going to fail, it has to fail now and revert back to the downside. The identical thing is true of the WTI. The sell point today was the 18-day average of closes for the pros. They're wrong if they get over 73.80, and you're looking to see, can you resume the downside to scope it out to the lower bands? You may not. This might be it. There's big resistance if you try to rally over the 75.30 level, as it's the 200-day average in gray. And then you've got the Bollinger Band. So between 30 and 89, 75, 89, a lot of resistance. In the heating oil market, neutral. As neutral as can be. Where do you fight battles? The 18-day average of closes. Natural gas. If you were sitting next to me, you get that elbow in your ribs. Why aren't you taking money off the table? You got an embedded reading, market's up there, and I know you're going to tell me it's going up here. I hope it does. But the odds of it doing so right now, as it's over the band, it's not embedded, are not in your favor. That's all that I'd be telling you. You take it the rest of the way. And here's what I want you to take the rest of the way for yourself. Our New Year's sale. It ends Friday, so you've got just 48 hours to take advantage of this if you think it through. 40% off my research. So you can buy the combo where you get my written research and my futures. You can buy just the two morning subscriber videos for Spiders ETFs called a combo. You can buy either one. Anything you want to do. It's for new subscribers, and if you're a current subscriber of mine, for a monthly upgrade. I'm doing no yearly upgrades allowed for current subscribers. That's not what this is about. And this is it. I don't have another event coming up to do a sale for you for a very long time. So if you want to take advantage of my research sale, I can't think of a better way for you to do it than right now. The year's beginning. You will find it's very inexpensive. When you go to the website at iraepstein.com, under the word research, you fill out all the information. You don't need a code. You'll see the regular price. When you go to purchase, what happens is it'll all come up as you click, put in your credit card info and all. The discount will show up right there. You will get that discount. I promise you, you will get the discount. If not, I will make sure that you get the discount. I've been doing this a long time, folks. I don't offer something and not give it. Even if the computers are wrong, I will honor it. And they're not. We're not seeing any troubles at all, and it's ending. We're getting a lot of people taking advantage. iraepstein.com, or give it a click up there. I'll talk to you first thing in the morning. You have a great evening.